Well, IT stocks, they gain in trade on the back of the mild weakness that we're seeing in the rupee, as well as strong hiring trends. Rima, explain this to us today, the IT sector and all the stocks, the relative outperformers.
Well, we know IT hiring has been very strong, but now the recent data from Naukri's JobsSpeak index indicates that hiring trend is accelerating. So in the month of February, IT hiring by the software companies went up by 38%. In the month of January, it was a growth of 36%. And if you can pull up a trend chart of the couple of months, you can see the average would have been close to high double digits, and now that is picked up to 36 to 38% as we've seen in the last 2 months. Basically, hiring trend is an indicator of demand, and because that is looking so good, the sense is that coupled with the other anecdotal evidence of strong deal wins in the management commentary, the demand is looking quite good for IT stocks at least. Okay,
all right. Let's take that discussion forward then. We have Hitesh Oberoi, the MD and CEO of InfoEdge, who joins us on the show. Hi, Mr. Oberoi. Thanks so much for joining in. Let's take that point forward. And Rima is just telling us that hiring in IT space has been very, very strong, more than 30% in the first couple of months. What is your analysis of that? Has it been that strong? And I think for you, IT is nearly around what? Around 40% of your total, hiring?
No, you're absolutely right. IT and ITES companies account for about 40-45% of our business. And in fact, most hiring in places like, in markets like Bangalore, Chennai, Hyderabad, Pune is IT hiring. And last year we saw a big slowdown in IT because a lot of noise around automation, AI, IT jobs being under threat and so on and so forth. So last year was a bad year, but this year, the first 3 quarters and even the months of Jan and Feb have been very good for IT hiring. IT companies, maybe they slowed down hiring last year and they're bouncing back this year. But this year for us has so far been very good as far as IT hiring is concerned.
Okay. The other trend that we're picking up is that auto hiring is fairly intact. So in the month of February, the Naukri JobsSpeak index tells you it's a growth of 17%. In January as well, we had a growth of about 6%. And on the other hand, banking is sharply lower. So in February, declined by 12-odd%. Walk us through these two trends, because the auto demand on the ground appears to be quite weak, yet hiring is quite strong. And even in the banking sector, what's leading to this muted growth or muted hiring?
So firstly, what I want to say is that let's not read too much into data for a month. I think what we should be sort of looking at are long-term trends and what's been happening over the last few months. In general, we've seen a pickup in services hiring this year, and BFSI actually led a lot of that for the first few months of the quarter. Of the year, and maybe it's seen a slight slowdown in the last couple of months. I don't know what the reason is, but maybe it's because of the ILFS impact, maybe it's something else. As far as auto is concerned, again, I think we should look at sort of long-term trends. Let's not read too much into just the data for February. I think auto companies are doing well till some time back. Maybe if there's a slight slowdown right now in the market, maybe it'll impact hiring with a lag. Who knows?
Okay, let's get to the numbers then, Mr. Oberoi. The last quarter was very good for Naukri in terms of growth. It was 20%, normally between 12 to around 15% in the previous quarters. What sort of numbers should we work with? Mid-teens or closer towards higher teens?
In Naukri, let me tell you, there are two things which impact our growth. One is, of course, how the domestic economy is doing, because that impacts non-IT hiring, which is about 60% of our business. And then, of course, how the global markets are doing, because that impacts to some extent IT hiring. And that's about 40-45% of our business. So this year, on the whole, has been good for both non-IT and IT, which is why you're seeing, you've seen 20% plus growth till now. Now, if the domestic economy continues to do well, and if IT companies continue to hire, we should be able to sort of clock these kind of growth rates going forward as well. But like I said, a lot will depend on what happens.
Okay, but just purely going by these strong hiring numbers for IT, we could expect a 20% kind of growth in the coming quarter, at least in the near term.
Yes, if this trend continues, then of course we will aim for these kind of sort of growth numbers, at least internally.
What about 99 acres? The feedback from the ground is that residential sales have been fairly sluggish, and that's because we had the GST rate cut, which was announced by the council, but that is effective 1st of April. So a lot of buyers have deferred their purchases. So the sales have actually been quite muted, at least in the Jan to March quarter. How will that impact 99 acres and the kind of revenue or margins that you're likely to post in Q4?
Yeah, so the real estate sector has been through a lot over the last couple of years. Demonetization, GST, RERA, NBFC sort of crisis, which also hit funding for real estate developers which has hit funding for real estate developers in the last few months, which has impacted new launches to some extent. But our sort of business, there is a resale part to our business which is not impacted by many of these things. There's a rental part which is not impacted by some of these things. But the piece which gets impacted the most is new homes. Now, within new homes also, there are two kinds of clients we have. There are people who sort of launch new projects, and then there are people who sort of launched projects years ago and they continue to sell that inventory. New launches got impacted, I think, to some extent, have got impacted to some extent because of the lack of funding sort of available to developers for new homes, for launching new projects. But existing projects, continue to be sold on our platform. Yes, there could be it is possible that some customers may defer purchases for a while because they expect prices to go down. But normally developers take care of all these issues when they price their products. So I don't expect this particular sort of element to impact our business, in this quarter. But yes, lack of funding to developers could hurt new launches.
So liquidity crunch could hurt them. Could the general elections as well impact business out there? That's what some reports suggest. Near-term headwinds.
Yeah, that's possible. See, because real estate is a very local sort of subject, and in general, there are local developers who have local connections. So sort of things that tend to slow down if there is uncertainty. Approvals tend to slow down if there is uncertainty. So I think there'll be a period of 2-3 months when people will wait and watch as to what happens, and then activity will pick up once again.
Okay. What about Jeevan Sathi? Because some of your, the number 1, number 2 players are a lot bigger. They've been pumping in a lot of money of late. You've, in your conference call, also spoken about pricing pressure and competitors being fairly aggressive. A lot of, questions are being raised. Why is the company persisting with Jeevan Sathi? Because the burn rate or the kind of losses that you've posted in Jeevan Sathi have also gone up in the last few quarters. What is the outlook on Jeevan Sathi, and would you be open to selling it?
Well, let me just clarify. It's not as if we've been losing a lot of money in Jeevan Sathi. We've been at it for many years, I agree. But our cumulative losses in the Jeevan Sathi business are maybe, $15 million in total, from inception. And that's nothing. I mean, many internet companies today lose, $20-30 million a month, right? So we've lost a total of $15 million since the time Jeevan Sathi started. And in the last 2 years, we've made impressive gains, I would say, in terms of, market share. We don't really operate in the south, but in the north and west, we are a reasonably large player. We've been growing our business. In fact, what you're seeing from competition is a response to, some of the good work we did in the market, and which is why, some of our competitors came under pressure, and now, of course, they're responding. But it's not as if our competitors are very large and they make a ton of money. They are also under pressure. Yes, in this, so this is a market which is actually split 3 ways. We are one player. Why we are persisting is because we believe that in the long term, it is possible to create value in this market. Yes, for value to be created, maybe some sort of consolidation is required, but we are not sellers at this point in time.
Okay, how big is the market on the whole? If you could give us an approximate number, and you're saying that you're number 3, what is your current market share, and where do you see that heading up to?
Yeah. So the overall market is about, I would say about close to $100 million, 650 crores or so. It's split 3 ways. We don't really operate in the south, so we are a north and west player. In the north and west, we believe we have a 30-35% share of the market. In the south, Matrimony is a dominant player. They probably have an 80% share of that market. So it's, it's possible to sort of make money in this business, but it's not possible to do that if it's split 3 ways.
If I, just do a broad calculation, 650 crores is the total size. on that basis, given that your exposure to South is, not very large, while North and West is something that you have been telling us, should I come up with a number of what, around 16, 17%? Is that a fair number?
So our national market share is actually sub 15%, but our share in the North and West is closer to 30-35%.
All right.
Okay, your cash in the books is close to about 1,800 crore rupees. Is there any chance that you will up your stated dividend policy, or perhaps even consider a buyback?
No, that is so a buyback is certainly not under consideration. 1,800 crores. We've been investing, as you know, outside as well. So we are investing in our internal businesses. Plus, we are also investing outside. We put a lot of money into policy bazaar recently. We continue to invest in new startups. Our internal businesses, we think over time will require more sort of funding as well. And then at the same and then we are also open to acquisitions. So if there's an opportunity, we will be happy to sort of consider that as well. So at this point in time, there is no plan to sort of aggressively give the money back to investors.
Okay. Just one more point. You held an analyst meet a couple of days ago on the 22nd of this month, and I'm reading a Goldman Sachs report on InfoEdge post the analyst meet, where you've said that you believe consolidation can bring significant pricing power in the marriage segment or in the Jeevan Sathi segment. The company remains open to the idea of M&A, but the competitors may not think so. What exactly did you mean by that when you say the company is open to the idea of M&A?
Basically, it means that we are happy to sort of consolidate. We are happy to acquire other companies if they are open to the idea. We're not selling at this point in time, but we are happy to buy.
At some point in time, will you look to sell?
There are just two companies, and they have to be open to the idea for us to consolidate.
Okay.
But at some point of time, would you be a seller? You're saying at this point of time, you're not a seller. When you reach some sort of a scale, currently you're at 15% in a 650, 700 crore market. Could that be something that you'd think of at some point of time?
We've not really given any thought to this. We have an internal plan which we are working on. We are very confident that we can push our growth in this business over time and gain share.
Okay.
Thank you, Hitesh, for joining in. So that's InfoEdge for you. Get into a break. On the other side, Bhavin Shah, the founder and fund manager at Samiksha Capital, joins in on the other side with a few top mid-cap bets. Stay tuned.